morning, Stavros Tousios for M4Markets, and I want to close the week with dollar against yen and also gold. We've broken outside this descending channel, and we are likely going to meet resistance at around 134.80. It's the 23 Fibonacci, as well as a double top from this swing high. We don't see a divergence here per se, but what we do see is a convergence to the top. Okay, and combined with this breakout, this could bring further continuation to the upside. For this, of course, we would have to go down to the 1 hour and watch closely what's going to happen on a potential pullback, and then, of course, whether we are going to revisit this channel, because in case we do break back within the channel, things are going to get a bit more complicated. But for the moment, I do see 5 waves coming up, and probably this 5th one is going to end like a wedge, and from there we might see a simple correction and then further continuation to the upside. That tells me that maybe we're gonna be done around the 134.80, perhaps even we are already finished, and then we are going to correct closer to 132.50, which still leaves us outside the channel, i.e. biased to the upside. And in case that happened, then we are looking for a potential rejection also. Well, if we say 134.72 is the level, down anywhere between the 38 and 61.8%. Okay, and 61.8 is usually the case when we are moving in this sort of pattern, unless if it is a correction. If it's going to be a correction, the most probably will do 50% and then we'll go up. But if it's going to be a wider, larger move of a correction, even like this, then most probably going to see the 61.8. Okay, so either case, this is what we are building on for now. And the thing is that they are trading inversely with gold, and judging by where we are, because we are very close to the 23.6, but when we look at gold, we are a little bit far still, because, you know, if we look at this correction, we are halfway through. That suggests that yen is weaker. Okay, so there is, for example, more chances that the USDJPY could move up versus gold moving down. This is what I'm saying, because yen is also weak at the same time. Anyway, we identified this wedge and false break a couple of days ago when we talked about this the 50 Fibonacci. We did close one of the days above, but it was immediately rejected, which means it was a false break. And now as well, we see some sort of convergence here, so we'll have to keep an eye on that, because we don't have any signals to the downside either. Okay, meaning what? First of all, we need to see the breakout of this trend line. Okay, without the breakout of this trend line, things are going to remain a little bit mixed and maybe even biased to the upside, since we don't have a signal on the RSI indicating one direction or the other is weaker or stronger. On the 1 hour, we do have some sort of divergence over here, but it would seem also that has already played out, because we fell from 1865 down to 1820. So what remains to be seen now is that as we move up, and that looks quite corrective because we have overlaps between the waves, can we stay below the 1842, below the 1 to maybe 45 max? In case we remain below that level, then most likely we're going to continue to slide. Okay, it could be followed by another leg up. However, what really matters when we go down or when we turn is to get 5 waves. And for now, it looks like we have 3 so far. If that's the 4th, we can get the 5th and then correct and then go lower. Or if that's not the 5th and we're going to move higher from here, then most probably this is just a correction and we're going to see further upside. At the same time, we also have this hidden bullish divergence here signal, and we'll have to pay attention on that. From that end down, as long as we're below the 50, we also remain kind of biased to the downside. But it's very important medium term, because this is a good medium term trade, to be fair, maybe to wait for this confirmation. Okay, because it's very likely any way that happens that we're going to see a pullback.